Hello and welcome to another update video about Link. Yeah, Link developed further in line with bullish expectations at the moment. Link is currently following the bullish pathway, the bullish scenario. The overall idea is that we are going higher here on the long-term chart especially. So let's take a look at that first, actually. We can take a look at the microstructures. But on the long-term chart, as you know, the thesis is that the market should move higher, and the price actually reversed from our support region and could be starting. We broke out of this wedge pattern we talked about as well, and the market could be rallying in a larger degree third wave. And the next upside levels to watch are 38.40 and 55.37. Ideally, this larger third wave would even reach $69 or higher, $69 plus. Well, we haven't even reached the 100% extension yet. That would be the next level to watch, absolutely. And I'm still following the white scenario primarily. I would not rely on all 5 waves in this cycle, but I'd really like to see the market get to at least $69. That would be ideal. But back to the shorter time frame chart. Again, before we do that, I've repeatedly stated that the white scenario is primary, and that also hasn't changed, yeah? So let's go back to the smaller time frame, and here you can see this white scenario bottomed in a smaller degree wave 4, which I haven't actually labeled on the long-term chart, but the idea is a wave 4 bottomed on Monday the 13th. A lot of cryptos formed local lows there on Monday, and the idea is we're now going higher in what would be circle wave 5, and circle wave 5 should be a 5-wave move in itself. And there are 2 pathways I can see. I mean, there is, as on the Bitcoin chart, a more aggressively bullish scenario. And then there is one that is also bullish, but allows for a bit of a pullback, which I can't guarantee. But it basically means, okay, we are in a local uptrend from that low that formed on Monday. The uptrend is still quite stable. It's still quite aggressive. But what if we break below certain levels? What would be the pullback zone or the support zone that we can watch if the market starts a local pullback? And don't get me wrong, while I record this video, there is absolutely no sign of any pullback. But if the market breaks below, if the market breaks below this red line, which is located around $23.70 or $23.80, yeah, more like $23.80, then I will assume that 5-wave move from the low finished. So that would be wave 1, wave 2, wave 3, a short wave 4, which is why I don't really trust this one, and then a wave 5. Also, Fibonacci relationships don't really look good in this structure, but it is a reasonable bullish, or let's say short-term bearish alternative. And then in a wave 2, the market might test this area between $19.26 and $22.39. From there, we can then move higher and do this, yeah? This would be the pattern that I would track should the market break below the red line. Until the market breaks below the red line, we might see very aggressive direct upside continuation in this white structure. Wave 1, wave 2, we're now in the third wave, and it should reach $28.89 plus in the third wave. And that is actually the scenario I'm following primarily. But again, you know, if the market breaks below a certain line, specifically that red one, then this would indicate that the white count is not sustainable, because that would mean that white wave 4 breaks into wave 1 price region, invalidated in an impulse. We will also break below the previous swing low, and also from a Fibonacci point of view on the micro level, this would be too deep for a 4th wave, within that third wave. So, but anyway, as long as we are still printing higher highs and higher lows, the white scenario is currently favored. That should give you all the levels. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.